Now, I really hope you enjoyed that strategy session. It truly is one of the most important principles that comes from the footprint tool. Again, I introduced a lot of variations there, a lot of methodologies to execute upon, and a lot of reasons why the imbalance strategy is definitely something you want to adopt. Maybe not so much from a strategy perspective, but at least from a principle understanding perspective, as it can aid you in making other trading decisions. Now, note obviously in terms of the template. Now, I really hope you enjoyed that strategy session. It truly is one of the most important principles that comes from the footprint tool. Again, I introduced a lot of variations there, a lot of methodologies to execute upon, and a lot of reasons why the imbalance strategy is definitely something you want to adopt. Maybe not so much from a strategy perspective, but at least from a principle understanding perspective, as it can aid you in making other trading decisions. Now, note obviously in terms of the template, in terms of trending consolidation, obviously in market context, these imbalances can pretty much rock up anywhere. I think that was something that I think you've come to figure. Obviously, they tend to hold, or the imbalance variations tend to work better based on a volume ultimately being traded. So that being said, in terms of market context, in trending markets, obviously imbalances are going to be a little bit easier to trade compared to obviously consolidation. Note obviously the reason being obviously trend brings higher volume and more participants in. Now, obviously in terms of the balanced and the imbalanced, we note again imbalanced markets do tend to bring potentially higher probabilities for imbalances that don't always get filled out straight away, so rather extend upon themselves first before later filling out. And then in terms of trade location, where we could find some of these imbalances, we spoke about breakouts, stops in the market, potential delta unwinds, as well as fundamental market movers. Now, that's some of the context we can find it in. Obviously, as you go through those imbalances and you find them, you'll highlight each one of the specific parts of the market context in which you found the imbalance. Now, in terms of conditioning and market conditioning, well, it was important to understand the time frame participants, and we spoke about how if there's a high amount of volume and we see really dark shades of delta pockets and high volume areas, that signals a lot of liquidity being provided and ultimately influential larger time frame participants. We did note obviously if it's lower volume, that's more of a speculative or algo in nature and is more likely to potentially reverse. Now, in terms of that liquidity, we notice high liquidity obviously implies a larger imbalance and continuation, whereas low liquidity obviously a much smaller chance of extension and a much higher probability of actually returning and filling out the imbalance. Don't forget, obviously, we did speak about, I know we obviously had the initial variation of, the extension and the potential retest before, or the pullback and then retest. But we then did speak about filling out the balance as well and, scalping it on both sides. Again, it's not necessary that you have to take on all three variations or try all three strategies. It's there for you to observe, try, see if you're willing to adopt it, see if you're willing to take on some of those scalps. Like I said in the previous unit, when we spoke about the elephant or hiding behind the elephant, traders don't necessarily take on these little scalps because we want to hold it for big winners. We simply do it because we can nick ticks with a very high degree of certainty. Okay. In terms of volatility then, it will be seemingly high. Now this is where you've got to be cautious, as we mentioned. Sometimes it can seem volatile simply because price moves quite aggressively, but it doesn't necessarily mean it is an aggressive directional move. And that's where we focused heavily on not just the volume, but also the delta coloring. Okay, let's now move on to the strategy identification. So then in terms of obviously identifying the patterns, don't forget obviously we use nice bright green lines. We did highlight obviously how to have an imbalanced chart and how you could easily see them with an imbalanced chart or your usual charts, but you would require being more observant of the price or of the lots traded at each price. So firstly, in terms of obviously interaction, note we spoke about the initiative being taken, hence the imbalance. Now note, it's initiative only in high volume. Okay, high volume is initiative, whereas low volume, it could be considered initiative, but it's very low volume initiative, which is sometimes reflective of maybe a little bit of stop up, maybe a little bit of a speculative type move, which more often than not it's going to reverse. In terms of obviously interaction, it's quite aggressive in nature, looks very aggressive on the ladder as well as on the footprint. In terms of the metrics, we spoke about how important volume is. It cannot be stressed enough. High means continuation, low means reversal. Okay, in terms of time, I did mention the idea or the concept of time being quite crucial with this, okay? Obviously, earlier on in the session, it's more likely there's going to be higher volume, higher liquidity, therefore, more likely to see, sort of imbalances coming in, which potentially can hold and continue up or continue with the imbalance. Whereas later on in the day, towards lunchtime or quieter periods where the volumes are much lower, we do tend to have a lot more imbalances that can be reversed. Now, in terms of the delta, obviously we do have high volume and low volume deltas, and I showed you how to see that with the delta shading. And obviously then in cumulative delta, not really relevant in terms of the strategy. It is a little bit of a shorter term time frame strategy, but you do expect it to go when there's high volume, initiative being taken, and we see these imbalances. You do expect the cumulative delta to go with the trend or in the direction of the trend. And then obviously note, in terms of relative changes, we will see a shift in the volume price delta, particularly as the high volume, the high volume imbalances come in. But note, obviously, when we have low volume imbalances, you might not see these relative shifts. So again, you can lean on those relative shifts to identify, is it a low volume, auction imbalance, or is it a high volume auction imbalance? Okay, let's move on then to the execution part of the template. In terms of obviously then the execution side, starting with the money management, note obviously we've got, depending on the variation you're taking, you can afford to be a little more passive in terms of entry. Why? Because once we get that a bit of initiative and the imbalance created, we do want to wait for the market to come back. Okay, so we will get a fill passively, and note once we see that absorption ahead of the imbalance, that's where we're executing. Our risk obviously simply goes below that. Somewhere within the imbalance. Note, if the imbalance does begin the process of filling out, it's likely to trade both sides of the imbalance, hence why we stop out within the imbalance. Note, obviously, in terms of target, when there's higher volume, we obviously have higher potential targets, because we could see obviously at least a retest of the extreme or even an extension of that extreme. So again, this is where context will be quite crucial, and again also another really good example why I don't like to give targets. I really despise this idea of where should I get out, where should I take profit. Okay, this is something you will learn through time. You'll learn where best is to take profits and where best is to place your stops. Okay, obviously note, obviously if you are going for the reversal variation, do keep your stops very tight and your targets very tight, because you've got relatively small targets in play. Okay, in terms of obviously then risk reward, for the first variation, for good reason, it is very high risk reward. For the second and the third variation, much smaller winners with equally small stops. So again, if variation 2 and 3 are not for you, that's okay. Okay, only adopt variation number 1. In terms of the application, it's an exact execution. We don't want to time this. We don't want to preempt it. We don't want to second guess ourselves. We simply wait for that absorption ahead of the auction imbalance, and we enter. We're not going to leverage on this one. No interest in leveraging here, simply because it's just going to skew our risk reward ultimately. So no need to leverage. And our tip: be switched on to identify early, whilst others get caught up in the price action. This is something that's crucial. Right? When there's a bit of volatility on price ladders, professional traders have a very bad habit of getting sucked into the ladder, getting sucked into what we call the Vegas lights. And the Vegas lights are simply that when the price is moving around quite a lot, you assume there's opportunity. Okay, that isn't the case. Volatility does not necessarily mean opportunity. It just means a greater variance of prices. So whilst most traders are not identifying the imbalance, you have identified it. You're not getting caught up in the price ladder, but you're executing exactly where you want to, and ultimately taking advantage of the auction imbalance. Okay, let's now move on to, hands down, one of my favorite books within the additional reading section. Now, if you haven't heard about this book, put it on Amazon straight away. Tim Ferriss, Tools of Titans. an amazing book. He's actually just released another one, another book that's come out, very similar. What this whole book goes about, very simply, just very briefly, Tim Ferriss, practical application, author through personal experiences. So he takes his own personal experiences, he adopts the habits and the approaches of other people, he tries them out, and then gives his opinion on them. Okay, he elaborates on them. That's pretty much what the whole book goes about. In terms of summary, you effectively learn from 200 masters across all industries, whether it's health, sports, science, life, it doesn't matter. So 200 people at the top of their game. They share with you their characteristics, their habits, the things they do, you know, some of their thoughts, some of their best guidance. They share all this with you, and that's what this book's about. It's a summarized version of 200 of the best performing, whatever you want to call them, performers in the world. Okay, now obviously, in terms of action, it's going to create, what's going to force you to adopt some of the practical processes. There's a lot of incredible processes you can take from this book. Things like taking nice cold showers in the morning, things like priming techniques, all sorts of things that you can definitely utilize in your trading. Now, in terms of the highlights, obviously, he does focus on strengths and weaknesses of titans across numerous industries, practical methods to apply that have proven to be successful, common characteristic traits amongst successful people, tactics, routine, habits, and tools of world-class performers, as well as some abstract edges. So, in essence, as you're reading, you're going to want to go on YouTube, you're going to want to go on the internet, watch videos about these top 200 performers, you know, find out who they are, and then you're suddenly going to want to start to adopt certain of their processes because they make sense to you. Fantastic book. Make sure you get this on your reading list as it's incredibly valuable. All right, let's go wrap up now with our drill section. So practice does make perfect. We're at the drill session again. As you know by now, watch the drill, complete your template, watch the drill with the guided tuition, make adjustments to your template. When you're comfortable, go back and watch some of the videos within the unit, again make another template. When you're happy that you understand the strategy and you're ready to move on, then do so. Alright, this then concludes now Unit 9, and this is obviously now our 4th strategy. We finished. We have got another 6 to come, so hang tight. And obviously, as Aristotle said, we are what we repeatedly do. Excellence, therefore, is not an act, but a habit. Okay, so you are repeatedly what you do. So doing this template every single time and doing it, you know, maybe 3 times a day at the end of every strategy session, and then maybe doing it over a course of a month 90 times and doing it over a course of 12 months, suddenly you're going to form an incredible habit of completing a template. Okay, and ultimately you will become excellent at it. Thanks guys, and I'll see you back in Unit 10.